When people look at December real estate data, it can be one of the easiest months to misread because December often behaves differently than the rest of the year. Activity naturally slows, fewer new listings come on, and the mix of buyers and sellers shifts as the holidays approach. That seasonal change can make month-to-month numbers look more dramatic than they really are. If you look at only November compared to December, some of the data does look softer. Prices dipped slightly and pending sales slowed. Taken on their own, those numbers can feel concerning. But real estate markets rarely move in straight lines, and single month comparisons don't always tell us what's actually happening underneath the surface. When we step back and compare December of this year to December of last year, the picture becomes much more balanced. Both average and median sale prices are higher year over year, and closed sales are up as well. That same pattern showed up last December too, and the December before that, which tells us this is less about a sudden shift and more about how the market typically behaves at the end of the year. Another helpful way to think about this is to look at the overall shape of the market instead of any one number. Inventory, new listings, pending sales, and closed sales continue to follow familiar seasonal patterns year after year. While overall inventory levels are higher than they were a couple of years ago, the market is still expanding and contracting in a fairly predictable rhythm. There is, however, one metric worth paying closer attention to as we move into early 2026, and that's pending sales. Pending sales were down not only from November, but also compared to last December. Because pending sales represent buyers committing today to close in the weeks ahead, they're one of the more forward-looking indicators we have. Now, this doesn't mean that the market is suddenly in trouble. It does mean buyer urgency may be cooling slightly, and that's something worth watching as we move into the first quarter. If that trend continues, it could influence negotiation dynamics and activity levels in the months ahead. So the question this month isn't whether the market is slowing in a dramatic way, it's whether it's simply catching its breath after another year of adjustment. Right now, the data suggests a seasonally quieter market that's still behaving in consistent, familiar ways, with one early signal that deserves monitoring rather than panic. If you're thinking about making a move, the most important thing is understanding how these broader trends intersect with your specific situation and timing. Market data is a guide, not a verdict, and context always matters. Full details are in this week's Market Pulse Weekly blog. You'll find a link in the description below.